So hello friends, welcome to my channel Bymncoachingcentre. So today I'm going to explain your uh, chartered accounts second part 2 first accounting process first chapter basic accounting procedures journal entries part 3 videos. So in last two parts I explained some of the topics of your chapter. Let's continue next. Here in last video I stopped 1 minute. I think I stopped here. So let us continue the topic from here. Now in last video you learned about the how to record the journal and what are the points you have to take care while recording your journal. So you have received a check from Ramesh and that is for rupees 13 lakh. Okay, the amount of bank increased, therefore the bank account has to be credited. Okay, debited. The bank account has to be debited because there is huge amount in this bank. Ramesh's liability towards firm has decreased. Ramesh's liability towards his firm has decreased. In fact, in this case, he no longer owes any amount to the firm. In this case, he is not having any money for his firm. This particular form of assets has disappeared. The particular form of asset has been disappeared. Therefore, the account of Ramesh should be credited. So, the account of Ramesh should be now credited. So, to write like this, what journal you will write means bank account D or debited rupees 13 lakh to Ramesh. Near down you have to write to Ramesh rupees 13 lakh. So he got credited, he got 13 lakh from bank account, he got rupees 13 lakh. Okay, next question. So paid rent for rupees 1 lakh. Okay, rupees 1 lakh rent has been paid. The bank balance has decreased and therefore the bank account should be credited. As you have taken paid the rent of rupees 1 lakh, the bank balance is now decreased and therefore you should the account should be credited. Means you have to put more money in the bank so that the balance may increase. No assets has come into existence because the payment is for services enjoyed. So no asset has come into existence because the payment is for services enjoyed and is an expenses and it is an expenses. Okay, expenses are debited. Now think expenses as services are for expenses. Now that expenses has been debited, think like that. Okay, after thinking like that, and the entry that you have to write after thinking is rent account you are doing debit and that is debited. You have to write and then you have to write rupees. How much rupees you are debiting is 1 lakh. 1 lakh you are debiting rupees 1 lakh and to bank account you are debiting how much rupees 1 lakh is been paid and reason being rent paid for the month of etc. What for what reason you are paying you have to write down. Next question is you have paid rupees 22,000 to the clerk. Your clerk as a salary you have paid for them. Giving this reason in X above you have to write the entry. Salary account, from salary account you have to write debited. You have debited rupees 22,000. You have to write rupees 22,000 debited. Next to bank account you have to write rupees 22,000 you have debited to their bank account. So you have to write being paid salary paid to Mr. To whom you are paying the salary and for the month of in which month you are paying the salary you have to write in that journal. Next question is you have received rupees 2,20,000. It's an interest. The bank account should be debited since there is an increase in the bank balance. As there is increase in bank balance, you have to debit means you have to take the money out. So there is no increase in any liability. In any liability, there is no increase. In your bank's liability, there is no increase. Since the amount is not returnable to anyone, the amount is an income. The amount it is an income, as it is not a returnable to anyone. So incomes are, they are credited, means you are getting it from some other. It is income you are getting. So what you will do means bank account. From bank account you will write debit, then 20 to 2,20,000, and 2 you are writing, giving it to interest account, 2,20,000 you are giving to interest account, and being interest received for the period, being interest received from whom you are getting that interest, and for which period you are getting that interest, you have to write. Next, when transaction of similar nature takes place on the same date, they may be combined while they are journalized. So while transaction happens on the same date, they may be combined while they are getting journalized. Okay. So rent account 1 lakh, salary account 2,22,000. Like this you can combine it. See, rent account it is separate, you are debiting 1 lakh, salary account you are debiting 22,000. These both you will combine to where it is going to bank account, you will write, you will combine both of them over here. Okay, 1 lakh 22,000 you will combine. When general entry of 2 or more transactions are combined, when you combine general entry of 2 or more transaction, that general entry it is called as the composite general entry. That general entry is called as composite general entry. Usually the transactions in a firm are so numerous that to record the transactions for a month will require many pages in the journal. In the journal you will require many pages for record a transaction for that month. For a month, for recording a transaction for a month, you will need many pages in your journal. And at the bottom of one page, the total of the 2 columns are written together with the words carried forward in the particular column. With the words you will write the total amount you have got in that month. And the next page is started with the respective total. With that respective total only, you will start the next page in the 2 columns with the words brought forward in the particular column. You will start here. Now they have asked you some questions. So we have to analyze a transactions of Mr. Sahil and Corporation for the month of March. For the month of March, Sahil and Corporation, a company, they have did a transaction. 2020, on March 2020, they have did a transaction on the basis of double entry system. They have did a transaction by adopting some of the following things like accounting equation approach. You have learned about accounting equation approach and traditional approach. Now, transaction for the month of March to the 2020 were like this. Sahil introduced capital through the bank of rupees 4,000. He introduced capital. Next, first let us read the questions what they have given. Next, how to make journal or double entry system, how to do, we will know. So next question is, they have asked cash withdrawal from the Citibank is rupees 200. Rupees 200 cash has been withdrawn. After loan of rupees 500 from me from Mr. Y, salaries paid for a month of March 2020, 300 and 100 still payable till month of March 2020. Furniture purchase rupees 500. Next, first we will solve this question by using accounting equation approach. The accounting equation is, so now the accounting equation is, it is equal to liabilities plus capital. Accounting equation is equal to liabilities plus capital. As you know, assets is equal to liabilities plus capital. So assets, in assets, cash that we have earned is rupees 200 we have withdrawn. Okay, now then we in first question from in bank we have 400, 4500, 300, 500. When you add all of these you will get in that you have removed 300 minus 300 minus 500 and minus 200. When you remove this this all, and when you add you will get 3500. 3500 plus 200, so therefore it will be 4200, because here you have given 3500. 4000 is the balance for bank you have. For that, if you add 200 rupees cash that you have earned, that will be 4200. But here in the so therefore the cash will be 4200 and 4200. So we have seen in this in accounting equation approach we have balanced it. Next, let us balance this in the traditional approach. So transaction, what all we have given, the information here they have given. I have written all the information. It may be introduction of rupees 4000 through bank by the priorities, cash withdrawn from the bank rupees 200, loan from Y, salary paid rupees 300 and still payable 100, furniture purchased rupees 500. Now analysis we have to do. Bank has received the money, owner has given bank balance. Next, cash comes into business, bank gives out cash. Like this we have to do why analysis, we have to do why we are giving it. And furniture is purchased, bank gives out money for buying that furniture. Next, account affected and nature of account. So account is affected, that is bank, and that is personal account. And the nature of account is capital. It is capital because we are giving money for our business for our growth of our business only, so it is capital. And it is personal only, our, and rule is debit the receiver, credit, and here the capital person, it is credit the receiver. In entry, debit bank, in capital personal, credit bank. Like that only this you can solve. So finally, for solving all this, the conclusion what we get, evident from it is evident from above analysis that procedure for analysis of transaction, classification of account, and tools for recording business transaction under accounting equation and traditional approach are different. So traditional approach and accounting equation, one minute sorry. So accounting equation and approach and traditional approach, they both are different from each other, but the accounts affected and entries in affected accounts, they are remain same under both approach. The both are remain same. Thus the recording of transaction in affected account on the basis of double entry system is independent of the method of analysis that we are followed by a business enterprise. If in the other word we have to say means account is to be debited and credited, that should be recorded. The dual aspects we should record why we are debiting, why we are crediting. Both remain same under both the approach. They both remain same under any approach if we go. Here in the illustration, next question they have given, we have to journalize means another journal they have given. The following 15 questions they have given. So following figures are given in 00. Okay, so December 2020, Ajit started a business with capital 4 lakh. So in December 2020, a person Ajit started business with 4 lakh. December 3, he withdrew cash from the business from the bank. From the bank, he withdrew for that business a cash, that is 2000. Next, in December 5, again he purchased some goods by making payment through the bank. Through bank account, he made some payment, online payment, any payment, and he took some materials, goods what he need for rupees 15,000. Okay. In December 8, he sold some of the goods for rupees 16,000. He sold the goods and he received the payment to his bank. He received the payment. In December 10, he purchased some of the furniture he purchased, then he paid by check. Then he paid by check rupees 2000. He paid check. Next is 2500. He paid check. Next in December 12, he sold goods to Arvind around rupees 2400. For rupees 2400, he sold that goods. In December 14, he purchased goods from Amrit for rupees 10,000, and December 15, he returned goods to Amrit for rupees 500. In December 16, he received goods from Arvind for rupees 2300 in full settlements, and in December 13th, in December 13th, sorry, in December 14th, he purchased goods from Amrit for rupees 10,000. Then he returned goods to Amrit rupees 500 for rupees 500. He returned that goods to Amrit. Next in December 16th, he received from that some goods from Amrit, money from Amrit, that is 2,300 in full settlement he received. Sorry, Arvind. Then in December 18, he withdrew goods from personal use. For personal use, he withdrew some goods for by using rupees 1000. He withdrew that goods. Then in December 20, he withdrew cash from business for some personal use. He withdrew that cash for business, that is rupees 2000. In December 24, he paid telephone charges, that is rupees 110. And in December 26, amount is paid to Amrit in full settlement, that is 9,450 amount is been paid to Amrit. December 31st, he paid for stationery rupees 200, rent 5,000, salaries for staff is rupees 2,000. Goods distributed in December 31st, goods distributed by the way of free samples is 2,000. These are the questions they have given, which we have to make our journal. First, serial number. First one they have asked. First question, in date December 1st, they have asked. They have asked bank account to capital account. So from bank account to capital account means from bank account we have sent that money to capital account being commenced for business. For business we have using that money. So we have sent it to our bank, our capital account that is made for our business. So we have debited from our personal account. It is our personal account. Our bank account is our personal account to our personal account only, but it is bank's personal account, not our personal account. It is bank's personal account. Ledger is not there, so we don't have any ledgers here. And debited, we have debited 4 lakh from our bank account, and credited 4 lakh in our capital account. In our capital account we have credited 4 lakh in 1st December. This is the first journal they have asked. Next, the second journal they have asked is December 3 cash account to bank account. They have transferred 2000. Okay, the cash being reason why they have transferred is being cash withdrawn from the bank. They have withdrawn for the cash from the bank for some buying products or goods. For some goods they have withdrawn. So from real account, from their real cash account, that is their real account, from that account to they have send it to bank account, that is their personal account. Their personal account they have taken the money. So in cash account, that is real account 2000 they have debited, in personal account 2000 they have credited. So this was your second journal they have asked. Next, if we come to third journal, they have asked on December 5 we have purchased from purchased account to bank account, being purchase of some goods for cash. For some cash, by giving cash we have purchased some goods. So here we have debited. So from real account, that is our purchase account, is comes under real account. From real account to bank account, that is our personal account, we have taken by paying purchase of goods for cash. For cash we have by being purchase some goods. So that is 15,000 we have debited, 15,000 we have credited. Next, after this next is uh, after this 15th December 5th, this is third journal. The fourth journal is December 8th, that is bank account. We have debited to personal, from bank account is our personal account to sales account. Sales account also comes under real account. So therefore from personal account to real account, and the debited amount is 16,000 and the credited amount is also 16,000. Okay, this is of December 8th, that is our fourth journal. Next, our fifth journal is December 10th. On December 10th, furniture account to bank account, being purchase of furniture we have paid by check, we have paid. So furniture, that is account, that is their real account, and from our bank account we are giving the money, so therefore it is our personal account. So from our personal account we have debited rupees 2500. They have debited and credited 2500. Next is December 12th. On December 12th, that is our sixth journal. So Arvind, a person whose account is personal account, because he is a person, he is giving to sales account, he is giving the money to the sales account, and this is a real account, because his sales account is real, comes under real account, being sale of goods. So he is being sale of goods, he is taking the money. So debited from Arvind account to sales account, he is sending that money so that he may have that saving out for his growth of business. So debiting, he is debiting 2400 and crediting to his sales account rupees 2400. This is our sixth so this is our sixth journal. Next, seventh journal is December 14, purchase account to Amrit. So purchase account is real account and to Amrit it's a personal account. So from being purchase of goods from Amrit. So Amrit, from purchase account, Amrit is taking the 10,000 money out for purchasing goods. So therefore purchase account debiting 10,000 to Amrit's account. So crediting towards Amrit account. So therefore he can purchase the goods that he needs. Next, on December 15th, Amrit to purchases. So Amrit personal account to purchases real account. So he is being to return account. He is taking purchases return account. So he is being goods returned to Amrit. So the goods that are being returned to Amrit. So from personal account, he is debiting or crediting that money to a real account, means purchase returns account, that is their account. Next, December 16th, bank account to discount account, bank account and discount account from two accounts to Arvind. So for the bank account is his personal account, discount account comes under nominal account, and to Arvind it is his personal account. So he is being cash received from Arvind in full settlement for allowed him to rupees 100 as discount. So giving him full settlement to paying is some money for paying for full settlement. So he is taking the money. So bank account 2300, discount amount is 100. So Arvind is getting 2400 to his personal account, is getting credited. Next, December on 10th journal is December 18. He is drawing account to purchases account. Drawings account to purchases account. So he is debiting from personal account to real account. He is debiting. So 1100 has been 1000 has been debited from his personal account to purchase account. He is crediting to purchase account. It is credited. He is being withdrawal of goods for personal use. For personal use, he is withdrawing that goods. Withdrawal of goods or withdrawal of money he is doing for his personal need. Next, December 24th is telephone expenses account to bank account. So being telephone expenses or being paid to Arvind to pay telephone company. So telephone expenses account, that is nominal account, their company's account, and bank account it is from his personal account. So 110 rupees has been debited from his account, from uh, their account to, and today is from his account to bank account credited. Okay, 110 rupees. Next, December 26th, Amrit to bank account to discount account. So Amrit from his personal account is being cash paid to Amrit and he allowed rupees 50 as discount. So he is taking the cash, paying cash, and rupees 50 as discount he is given. So personal account, from personal account to bank account, that is his personal, discount account is nominal. So 9500 from his personal, means he is debiting and crediting, and he is crediting 9500 to his account. These two you can only solve, I think so. Next, in 6th illustration they have asked, we have to classify the following accounts under traditional and accounting equation approach: building, purchases, sales, bank, fixed deposit, rent outstanding, cash, adjusted purchases, closing inventory, investment, trade receivables, sales tax payable, discount allowed, bad debits, capital, drawings, the money we are drawing out, interest receivable accounts, rent received in advance account, prepaid salary account, bad debts recovered account, depreciation account, personal income tax account. From this all account, we have to classify which one comes under the traditional account equation approach, which one comes under accounting equation approach. Okay. Now, building. So building, it is a real account, so it comes under traditional approach. So traditional approach. So first, traditional approach, it comes under real, and in accounting equation approach it comes under asset. The buildings comes under this in the traditional and accounting equation approach. On which it comes, you have to classify. Purchases, it is real only. Real. In accounting equation approach it comes to assets. And sales, it is also real, but in accounting equation approach it comes to revenue. Bank fixed deposit, it is personal, because bank fixed deposit theirs, and here it is asset, we are gaining. Rent, it is nominal. Expenses, we are giving the money, we are paying the rent, so it comes in traditional approach it comes under expenses, means nominal. In accounting equation we tell it as expenses. Next, rent outstanding means it comes under personal account because he is taking the rent. Liability, in the accounting equation we say it as liability. Adjusted purchases, it comes under nominal, means expenses, we are expensing. In accounting equation we say it as expense, but in the traditional approach we say it as nominal, means expense. And next, in closing inventory it comes under traditional real. In traditional approach it comes real, under real, means real it is asset. In the asset we say in the accounting equation approach. Next, in investment it is real in traditional approach and asset in the accounting equation approach. Next, trade receivables, it is personal in traditional approach but it is assets in the accounting equation approach. Next, sales tax payable, it is personal in the accounting traditional equation but traditional approach, but it is in liability in accounting equation approach. Discount allowed, it is nominal expenses and in the traditional approach, but it is temporary capital, means it is also expense we say in the accounting equation approach. Bad debts, they are the nominal expenses, means they are the what we say 1 minute. So bad debts, they are the nominal expenses in the traditional equation approach, that means expenses. And it is temporary capital, it is also expenses in the accounting equation approach. Capital, it is personal, we are from it is our money, we are giving it to grow our business. In we say it personal in our traditional approach, but in our accounting equation approach we say it as capital only, we will not say with any other words. Drawing, in the accounting equation traditional approach we say it as personal only, but in the accounting equation approach we say it as temporary capital, means drawings, we are drawing the money only we will say. Next, interest receivable, it is personal in the we say in traditional approach, but asset we say in the accounting equation approach. Rent receivable in advance, we say it is personal in our traditional approach but liability in our accounting equation approach. Next, we say prepaid salary as personal in traditional approach and asset as accounting equation approach. Bad debits recovered as nominal gain, means gain in accounting equation approach, traditional approach. Temporary capital we say in the accounting equation approach, means gain. Depreciation means nominal, means expenses in the traditional approach. Temporary capital means expenses in the accounting equation approach. Next, personal income tax, it is personal, means drawing in the traditional approach, but temporary capital means drawing in the accounting equation approach only. Next, so transaction of Ramesh from April, they have given below, so we have to generalize them. We have to write So Ramesh here in April 1st he has started his business with rupees 10 lakh. He has started his business. Okay. In April 3rd he brought goods for cash rupees 50,000. He brought goods by paying 50,000. Okay. In April 5th he drew cash from bank, that is 10,000. He drew the cash from the bank, he drew with this cash. In April 13, he sold some of the goods to Krishna Goods by he taking credit of rupees 1,50,000. He take the credit and he sold the goods to them. In April 20, he bought some goods from bought from Shyam Goods on credit. On credit, he bought some goods and for rupees 2,25,000. In April 24, he received the goods from Krishna for rupees 1,45,000 and allowed him some discount of rupees 5,000. In April 28th, he paid Shyam some cash of rupees 2,15,000 and discount was allowed for him is 10,000. Final cash sales for the month is 8 lakh he has, because he paid, and he paid rent of rupees 50,000 for as rent. He paid 50,000 and he paid salary as 1 lakh salary. So now we have to write the journal for this. The journal for this questions they have given. Okay, this is our final journal, and by this your chapter will be end. So April 1st they have asked, April 1st, bank account to capital account. He has done, he has being the amount invested by Ramesh in the business as capital. So he has invested invested some amount from his bank to business as a capital. It is debited. So from it is bank account we will give 1 and capital account as ledger 4, and bank account he has taken debited rupees 10 lakh, to capital account he has credited rupees 10 lakh. He has put given 10 lakh for, he has invested for his business. For that business he has invested 10 lakh. Okay, we'll take like that. It was our 1st April journal. After the 1st April journal, the next question they have given 3rd April, bought goods for cash. Now the 3rd April 3rd, the bought goods for cash. So he has purchased from purchase account to bank account, because being goods purchased for cash we have purchased some goods. So ledger is 7 for 1. So debited is for purchase account. From purchase account he has debited 50,000 to bank account for buying that goods. He has credited from debited account. He debited amount credited. He has a credited amount is 50,000 to our bank account for purchase of that goods which he want to bring. Next is cash account to our bank account. In on 5th April, he brought some cash. He took some cash from the bank. That is cash from cash account to bank account. The cash has been withdrawn from the bank. For some reason he has withdrawn the cash on April 5th. So he has debited 5 by 1. So that is he has debited 10. The amount is 10,000 and credited amount to his bank account is 10,000. Okay. On April 13, he has April 13 sold to goods to Krishna. Sold goods to Krishna is some company. So from Krishna to sales account is being sold to Krishna on goods has been sold to Krishna on credit. So 1,50,000 is our amount debited, and to his sales account he got 1,50,000 as they had paid by buying that goods. Next on April 20th, he had bought from Shyam goods on credit. On Shyam goods he has bought some product or anything he has bought, or goods, any product he has bought. So from purchase account to Shyam he has paid some money. So being goods bought from Shyam on credit, so he has debited 2,25,000 for buying that goods, and they have to Shyam goods we have credited 2,25,000 for bringing that goods here. Next on April 24th, we have received from Krishna and allowed him discount. So from bank account to discount account to Krishna. So what we have did on April 24th, we have received some cash from Krishna and given him some amount of discount to him. So 1,45,000 is our credit, is our debited, and 5,000 is also we have given debited, means discount we have given. So total we have credited is 1,50,000 from the bank account and discount account to Krishna. So we have cash received from Krishna and discount allowed from him allowed to him, we have given discount. Next is April 28th, paid Shyam cash discount allowed. So Shyam, he has paid some cash, Shyam to bank account and discount account. So to bank Shyam, he has paid 2,25,000 has been debited from Shyam account. To bank account, he has given 2,15,000. He has been paid to Shyam and discount allowed to him. So 2,15,000 he has paid, and 10 lakh is the discount he got from the that business on April 28th. This is next journal. Next is on April 30th, they have asked cash sales for the month. So from bank account to sales account, the being goods sold for cash. So we have being sold the goods for cash. So 8 lakh is our being goods sold for cash. So 8 lakh is our credited, debited, and to our sales account, from bank account to sales account, we have debited 8 lakh rupees. And finally on April 30 we have given some rent. So rent account is 50,000, we have given rent. Salary we have given 1 lakh, so that comes under debited. And to bank account we have given 1 lakh. From bank account we have given 1 lakh 50,000. So totally being the amount paid for rent and salary, and total if we do total 27 lakh 60,000 is in debit side we will get, and 27,600 is our 27 lakh 60,000 in our debit, and 27 lakh 60,000 in our credit side. So these are the journal we have done in the question they have asked. This is our journal we have given. So after this all journal we have done, the final thing is you will ask, after doing all these things, journal everything, you will have a question in your mind. What advantages will this journal bring to you? So in journal, transaction recorded on the basis of double entry system. They on the basis of this double entry system. Double entry system, if you do any transaction, there will be some advantage. As transaction has been recorded in the chronological order, you can get complete information about the transaction on the time base, as you will be noted with date, and on which date, which month, which year you will noted. So you will get and what reason you have given them money, or what reason you have taken them money. Complete information about that transaction, because you have done it in the chronological order, you have written it correctly. And entries recorded in the journal are supported by a note termed as narration. By a note in narration, it is termed as narration, which is precise explanation of the transaction for the proper understanding of the entry. One can know the correctness of the entry through this narration. So entries which all you have recorded in the journal, they are supported with a note that we have written a note. Here you see we have written a note being the amount paid for rent and salary. That is means you will understand you have paid some money for rent and salary. Okay, that is note. So short note termed as narration. Narration, which is a precise explanation of transaction for the proper understanding of the entry, that is called as a proper understanding of the transaction. So you will understand explanation, you will understand easily why the transaction has happened, and one can know the correctness of the why this. Through this narration you will know correctness of the transaction. Next advantage is journal forms the basis for posting the entries in the ledger. So it forms the basis of posting the entries in the ledger, and this eases the account in their work and reduces the chances of error. So okay friends, I will see you in my next video explain another chapter of your chartered accounts. So till then, take care, have a nice day. Bye my dear friends, and I think you understand your chapter basics, account procedures, journal entries. So I will see you in my next video explain another chapter. So if you like my video, like how was my video, please comment and subscribe my channel for more video. I will see you in my next video. Till then, take care, have a nice day, and Bye, my dear friends.